Today, buy now, pay later goes boom. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Buy now, pay later products are used as an alternative to credit cards and have exploded in popularity during the coronavirus pandemic as people turn to online shopping due to lockdown restrictions. Since its emergence in 2016, the buy now, pay later sector has grown rapidly. The total value of transactions increased to 5.6 billion Aussie dollars for the fiscal year ending the 30th of June 2019 from 1.3 billion in 2017. And as of June 2019, there were more than 6.1 million open accounts, or around 30% of the adult population. Key drivers of the sector's success have been its focus on technology-based services. While interest is typically not charged on loans, instead customers are generally charged a fixed monthly fee. As a result of its rapid growth, the sector has been facing increasing regulatory scrutiny, including a review by ASIC in 2018 and a Senate inquiry in 2019. Indeed, the buy now, pay later sector boomed through 2020, according to our latest research, with more than 550,000 households actively using these facilities and with a growth rate that is significantly stronger than other forms of credit, both in volumes and value. Of course, buy now, pay later is not even defined as a credit product in Australia, but more of that later. But perhaps the halcyon days are over for now, as global giant PayPal is set to take on Afterpay and Zip on their home turf, in a sign of the growing competition for the fast-growing buy now, pay later sector. The SMH reports that PayPal will announce plans to offer a buy now, pay later service to its 9 million customers in Australia from June, after a global launch last year flagged its intention to get a piece of the booming sector. The digital payments company, which has posted rapid growth in the United States buy now, pay later market since launching last year, said the move into Australia's buy now, pay later sector was a response to strong demand from customers and merchants alike. PayPal Australia's General Manager of Payments, Andrew Toon, said the company had been inundated with requests for the service from its Australian business customers, with numbers in the hundreds of thousands. They're looking for us to be able to deliver choice and flexibility to their customers in the PayPal checkout, Toon said. The move reflects growing competition in Australia's market, which accounts for a quarter of Afterpay's total customers and about 40% of Zip customers, according to recent half-year results. The chief executive of payments consultancy McLean Roche, Grant Hallison, said PayPal will be well placed to cross-sell buy now, pay later products to its customers, as he predicted its entry into the Australian market would squeeze Zip and Afterpay's profit margins. In the 6 months in the US, they got 45 million customers with the same product. He said they would be the biggest threat to come here. And when PayPal announced they would offer buy now, pay later products in September last year, Afterpay and Zip played down the competitive threat, with Zip saying there was plenty of room for multiple players, while Afterpay argued its platform did more than just arrange payments. The move comes alongside a separate plunge in buy now, pay later sector shares, with Zip and Afterpay stocks falling sharply in recent days in response to rising bond yields, a trend that has triggered a global sell-off in high-flying technology stocks. Afterpay fell 3.6% on Tuesday to $107.19, and the stock dropped more than 30% below its February peak, but it jumped 8% on Wednesday, ending a run of losses. And PayPal's buy now, pay later offering will allow customers to borrow up to $1,500 for a transaction and then pay the money back in 4 equal installments without interest, including one upfront payment. It will charge a $10 fee for a missed payment, and it will be capped at a total of $30 for purchase over $125 or $10 for purchase under $125. And merchants will pay for the service through the fees they already pay to PayPal, and the company's standard merchant charge is 2.6% plus 30 cents for domestic transactions. PayPal's products will not be regulated under credit laws because it is not charging interest. Mr. Toon said it would use extensive data on customers and merchants to conduct suitability checks on customers, and the company was looking at the recently released Buy Now, Pay Later sector code of practice. PayPal has developed a reputation over many years of being a responsible payment platform, and that is absolutely the focus of what we're looking to achieve through this entry into the Buy Now, Pay Later space, he said. And PayPal said it counted more than 90% of Australia's largest businesses as merchant clients, including Coles, Woolworths, The Iconic, Carver, Kogan, JP Hi-Fi, Qantas, Telstra, Uber and Airbnb. But then going back to that question of regulation, the UK government announced that popular Buy Now, Pay Later shopping services like Klarna will face stricter regulation under new proposals. The UK Treasury said Buy Now, Pay Later firms would come under the supervision of the Financial Conduct Authority, the FCA, which regulates financial services firms and markets in Britain. Such firms will be required to conduct affordability checks before lending to customers, the government said, while people will also be allowed to escalate complaints to the UK's financial ombudsman. Popularised by the Swedish startup Klarna, these services let customers spread out the cost of their purchase over a period of interest-free instalments. Other companies in the space, of course, include Australia's Afterpay, which operates ClearPay in the UK, and Laybuy. Consumer groups have warned that some people, particularly younger people, could be lured into a debt trap. The Consumer and Product Review Company, which in the UK, for instance, said it's concerned that Buy Now, Pay Later products may encourage people to spend more than they can afford. And a review from the FCA's Christopher Woolard found that the UK Buy Now, Pay Later market is worth about £2.7 billion or $3.7 billion, with 5 billion Brits using such products since the start of the pandemic. Meanwhile, more than 1 in 10 customers of the major bank using Buy Now, Pay Later services are already in arrears. Buy Now, Pay Later can be a helpful way to manage your finances, but it's important that consumers are protected as these arrangements become more popular, John Glenn, the Economic Secretary of the Treasury, said in a statement recently. By stepping in and regulating, we're making sure people are treated fairly and only offered agreements that they can afford, the same protection you'd expect with other loans. Some lawmakers in the opposition Labour Party criticised the government for what they called a U-turn on Buy Now, Pay Later controls. Labour's Stella Creasy had led calls for regulation of the sector, but the government voted down a proposal to do so only 3 weeks ago. Alice Tapper, a financial campaigner who has pushed for a regulation of the Buy Now, Pay Later sector, said she was delighted by the recent news. As it stands, victims of fraud via Buy Now, Pay Later products have been unable to seek the support of the Financial Ombudsman, and shoppers as young as 18 are being advertised these products by influencers with no risk wording, she said. Today, Buy Now, Pay Later is often a teenager's first encounter with credit. Regulation means consumers will receive the information and protection they deserve. The FCA and government now need to act fast to bring these recommendations to fruition. And Klarna, which has raised a total of $2.1 billion in funding to date, said it welcomed the move towards regulation. As a fully licensed bank, Klarna is very comfortable operating in a regulated environment and wholeheartedly supports the regulation of the Buy Now, Pay Later sector in the UK, the spokesman said. We agree that regulation has not kept pace with new products and changes in consumer behaviour, and it is now essential that regulation is modern, proportionate and fit for purpose, reflecting both the digital nature of transactions and evolving consumer preferences. Klarna is one of the many tech firms expected to debut its shares in the public market over the next couple of years. The company was last privately valued at about $10.6 billion. Afterpay, meanwhile, has seen its shares rally significantly, although, as we said earlier, tailed back recently. And Damien Classerby, Executive Vice President of the Public Policy of Afterpay's ClearPay unit, said, "We welcome today's recommendations and look forward to working with the FCA, the government and stakeholders to build on the consumer protections we already provide to create the applicable regulation for the sector. It's always been ClearPay's view that consumers will be best served by products designed with strong safeguards and appropriate industry regulation with oversight from the FCA. And Francesco Simoneschi, co-founder and CEO of UK fintech firm True Lawyer, called for sensible regulation that protects consumers but not at the expense of business model innovation. It's clear this is becoming a gigantic consumer experience, and I would say a little bit of guidance from the regulators is welcome. I hope it's going to be open enough not to create red tape to innovation and be laser focused on the point of risk. But here in Australia, where buy now, pay later is not regarded as a credit product, weirdly, we are going down the self-regulation route, as from the 1st of March, the Australian Financial Industry Association, the AFIA, announced that its code of practice for the buy now, pay later sector had come into effect. As Moody's said, the buy now, pay later sector, made up of technology-based firms that provides consumer credit, will benefit from the code because it will promote best practices on how companies should interact with customers, so it's a credit positive. The new rules will strengthen underwriting practices and so improve the credit quality of buy now, pay later receivables, making it credit positive for the securitization trusts of buy now, pay later firms such as Zip's Master Trust. The code is the world first, according to the AFIA, and this is what their release said. AFIA's Buy Now Pay Later code is a world first for the sector. It goes above and beyond the law in Australia, setting best practice standards for the sector and strengthening consumer protections. It does this while preserving customer choice to make purchases and payments in a way that suits their needs and preferences. AFIA has worked with its Buy Now Pay Later members and key stakeholders, such as consumer advocates, to develop the code. There has been broad consultation to understand the key issues that the code should address and which would bring most value and confidence to consumers, advocates, ASIC and other stakeholders. Speaking about the Buy Now Pay Later sector, the AFIA CEO Diane Tate said, "The growth and diversity of the products and services enhances consumer choice. It brings to life the concept that innovation and competition are for the everyday person, and that this can be achieved while codifying strong consumer protections. The buy now, pay later sector includes a broad range of business models, so customers wanting a buy now, pay later option can choose the right one for them depending on their payment preferences, the purchase type, and their circumstances. Buy now, pay later is a way to budget and manage your money effectively. You pay for your purchase in installments and without the burden of interest." On the code, she stressed that the key aspects in safety for consumers, saying that from the get-go, strengthening consumer protections across the sector was a focus of AFIA's and its Buy Now Pay Later members. The code is explicitly consumer-focused and has 9 commitments that signatories make directly to the people that use their products and services. Tate highlighted that all code-compliant Buy Now Pay Later providers conduct suitability assessments before a potential customer can make a purchase, and that there will be further additional checks to prevent customers extending themselves further. For instance, if they are showing signs of difficulty-making repayments. On top of that, there are detailed commitments to help people who find themselves in financial hardship. And it is mandatory for all providers to be members of the External Dispute Resolution Service, the Australian Financial Complaints Authority, or AFCA. And she noted that while the Buy Now Pay Later providers already have to comply with a broad range of legal and regulatory requirements, the key advantage of self-regulation is agility. Our code can and will change as this innovative sector evolves. Now, a key focus of the code is to strengthen consumer protections and reduce social risk, which for finance companies particularly arise from their interactions with customers. According to Moody's social risk heat map, finance companies, including Buy Now Pay Later providers, are seen as having moderate exposure to social risk. As part of the code, lenders are required to focus on the suitability of their products, taking into consideration the consumer's personal or social characteristics that can affect their ability to manage financial interactions. For example, buy now, pay later services are not allowed to be offered to customers under the age of 18. Other requirements include the following: restricting unsolicited marketing or selling of buy now, pay later products and services, being transparent about fees and repayment obligations, ensuring customer complaints are dealt with in a fair and timely manner, and providing suitable options for customers experiencing financial hardship. Underwriting will also improve because buy now, pay later providers must now take into consideration a customer's income and expenses, as well as their other debts and liabilities when assessing the suitability of products. And buy now, pay later providers will need to be accredited to become a code compliant member. The accreditation process is performed by an independent committee and involves the buy now, pay later provider sharing information with the committee on their systems and processes to show how it will comply with the code. This includes documentation on their complaint handling and hardship policies, information about their upfront and existing customer assessments, and their merchant guidance and monitoring assessments. According to AFCA, code-compliant members comprise an estimated 95% of the buy now, pay later market, including Afterpay, Bright, Hum Group, Klarna, Latitude, OpenPay, PayRight and Zipco. The code will be reviewed within 2 years and at least every 3 years thereafter, and the code will be self-regulating. However, customers can report breaches to AFIA, which can then be escalated independently to the Australian Financial Complaints Authority, AFCA, an independent external dispute resolution handling authority overseen by the Australian Securities and Investments Commission, the country's corporate markets, financial services and consumer credit regulator. But I have to say that I still think the UK model, where there is more explicit credit management and regulation, is the way to go, because I still hold the view that buy now, pay later is a credit product. If it quacks like a duck and walks like a duck, it is a duck. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.